Hello, everyone. Good morning to you, and welcome to the Thursday session of our morning live show. As we are going to be, as usual, taking a technical dissection of the current market structure in anticipation of the London and the New York session today. It has been quite an interesting 24 hours following the FOMC and the rates decision yesterday, and actually the rate came in just as expected from the US economic dossier yesterday, and we saw some volatility trading go on during the course of yesterday's trading session, leading into a choppy situation during the early hours of today. And most importantly, whenever we have this kind of volatility trading, we always want to ensure that we have entered before the volatility happens, and if we had missed it, we want to wait out for the market to normalize before we want to do some re-entry. So we had some profit taking activities yesterday on the XAUUSD, though we missed the second move. We are going to be talking about that during the live session today. And for those who are joining us for the first time, you are highly welcome on board. I'm so excited to have newcomers in the house. And what we simply do here is to deliberate on the 1 hour time frame on what our expectations are on the financial instruments that we have chosen for the week. And in fact, I normally share a detailed and holistic point of view perspective on a series of financial instrument during the course of the weekend. And for this week, we have 4 instruments on our watch list, which are the XAUUSD, the USOil spot, USDJPY, and the GBPUSD. So I normally do this during the course of the weekend, and I share this on my YouTube channel here. And it's very important that you watch this video so that you can have a background knowledge of what we are talking about on the 1 hour time frame. I have the link to those videos in the detail box below. You might want to watch them, and I've made things a little bit more easy so you can navigate through whichever aspect you want to watch, as these videos are already time stamped. So with that being said here, let's dive right into the business for today. But before I do, I would appreciate that I see some feedback in the comment section as regards the quality of the audio and the visuals. Are you seeing me clearly? Are you hearing my voice? Please let me know in the comment section. Okay, thank you. Amin says the voice is stuttering. Okay, thank you. So let me just do some readjustment. Let me know what it sounds like now, please. Let me know what it sounds like now. I just did some adjustments on that. Thank you very much, Amin. Good morning, Leon. Good morning to you, Kwakun Amin. Okay, I have 2 Amins in the house. Good morning to you guys. I'm really excited to have you guys around with me. So with that being said here, let's dive right into the business. Please, I would like to know the quality of the audio after the changes I just made to it. Please let me know in the comment section if things are okay. So with that being said here, as usual, the first thing we are going to be doing is to keep tabs with the fundamentals, of course. And what we are going to be doing is to go right into the economic calendar to see if we do have any high impact macroeconomic event that we shall be looking forward to, that majority in the market will be looking forward to, so that we can position ourselves in such a way that we can catch any move as a result of this event. And today being Thursday, May 4, so what I normally do is to go to fxstreet.com. So they have an economic calendar which I have been using for some time now, and this gives me specific informations I need as regards the events I am looking at. Okay, Leon, thank you very much. Amin, thank you very much. See, Luna, good morning to you too, and glad to have you around. So here we are on the economic calendar, FX Street, and what I do here is to look at today's Thursday, May 4. And as you can see what we have on the screen right here, we don't have any high impact macroeconomic event that will be affecting any of the pairs that we are monitoring. We have the GBP, we have the USD, and we have the Japanese yen, and none of these events here is going to be affecting any of them, though there could be some traces of ripple from this event into the pairs, but it's not really going to be that significant. So with that being said here, and with no high impact event to look out for, we shall be diving right on the chart to see things from a technical standpoint and decide what our next line of action will be for today. So the first commodity we are going to be taking this morning is the US oil. And on the US oil, we have been witnessing a bearish momentum since the beginning of the week, and fortunately for us, we were able to take advantage of this opportunity as we saw price action break down the $75.75 level at the beginning of the week to inside the bearish momentum. And for the sake of those who are not part of our live sessions on Monday, Tuesday, and Wednesday, I would want to go through how the week started and what made us to actually sell the US oil for this week. Now let's look at how the week started for us on the US oil spot. Now we had a situation here where price action was trading below our key level. Remember, we had a key level, had the $77 area right on our higher time frame. Let me show you for the sake of clarity. So on the 4 hours time frame, we had this whole setup figured out. At the beginning of the week, we had this descending channel, which was thought to be a retracement of the previous impulse leg that we identified. So we had a channel like there. Then we had the key level around the $77 area, which also shares a confluence with the resistant line of that descending channel. And as at last week's trading session, we saw that price action closed just around the $77 area, giving us a very critical confluence to look out for as we head into this week that we are in right now. And one thing we said at the beginning of the week is that we are going to be seeing how price action will be reacting to the structure to determine if we are going to be buying or selling at the beginning of the week. So we were looking forward to, if price action breaks out of the $77 level, then price will have also broken out of the resistant line of that descending channel to give us a signal that that trend line may no longer have the strength to continue to reject any bullish momentum at this point. Then we also said that if price action continues to trade below the $77 area, selling pressure resumes below that structure, we shall be looking out for selling opportunities in this market. So this is one of the key parameters that guided our trading activity. Then what we saw at the beginning of the week was quite interesting, as we saw a strong bearish gap happened. So it means that during the course of the weekend, we had some transactions from major players in the market which actually supported a bearish bias for the week. So we already seen the signs in the market actually at the beginning of the week. Then when we scale down into the 1 hour time frame, we saw a simple setup that we used to guide our trading activity. So let me zoom into the structure here. So this is what we saw at the beginning of the week. So we had this old channel figured out where price action was ranging within the $76.20 level and the $75.75 area to give us a level of indecision in the market. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistant line to give us a buying opportunity, or break down the support line to give us a selling opportunity. And this was exactly what happened right during the early hours of Monday. We saw price action break down the support line at the $75.75 level to trigger our first sell position for the week, though we were taking out with some small profit actually, as we saw price action trapped within a range which lasted about 24 to 36 hours in this market between the $75 area and the $75.75 level to give us a level of indecision at that point. And as usual, we decided on Tuesday that if price action continues to range within this area, we shall remain patient, waiting for an opportunity at either a breakout of the $75.75 level for buying opportunities, or a breakdown of the $75 area, after which the trend line, the bullish trend line there, would have been broken to give us a signal that sellers have finally found their stance in this market. And with a sell stop order below the $75 area, we had our second sell position for the week triggered, and we continue to ride the move all the way to the downside. We also had opportunities of adding more positions to our existing trade. Remember, we identified this level at the $74 area, where we said it has been serving as a major buying niche at one point during the course of last week's trading session, and we said the breakdown of that structure obviously will be welcoming more opportunity. We also had the breakdown of the $71.50 level, triggering another sell position there. Then at this point, when price action broke down the $71.50 level here, we saw that it has broken down the support line of that descending channel. For the sake of clarity here, let's go back into the 4 hours time frame so that you can see what I'm talking about here. So this is the 4 hours time frame, and that is the $71.50 level. And if you look at this closely, you will see that we had a support line of that descending channel figured out here, and with the breakdown of the support line, it was a beautiful sign that sellers are still very, very strong in this market. So we had a structure broken to the downside, and we also had another structure at the $69.30 level broken to the downside. So it has been quite a profitable trade for us on the US oil for this week. And for those who have been part of this move since the beginning of the week, congratulations to you guys for being on standby to catch these opportunities. So right now, as we are in preparing for the London and the New York session today, what is going to be our plans? And for some of us who are still in the sell position in this trade, who are hoping to maximize more profit on this one, I would advise you to move your stop loss accordingly. Lock in some profit at this point, as we don't want a situation where price action is going to be taking us out of that position in a loss or something lesser than what we already made so far. So I'll advise you to move your stop loss anywhere around the $70 area. Seems most appropriate at this point. Let's give price action some room to breathe, with the hopes that price will still have leverage to continue to the downside. So at this point in time, preparing for the Noja says there is a rattling sound. Okay, so let me just reduce. All right, let me know if there is a rattling sound again, please. Let me know. Thank you for the feedback. I really do appreciate these feedbacks. They help me to at least know the settings of my audios and everything. I'm getting used to all these things. I'm trying to get used to all these things. So thank you very much for that feedback. Let me know if there is still any other defects in this audio quality of this video. All right, thank you very much. So before the break in transmission there, so I told us all to secure all sell positions by moving our stop loss accordingly, lock in some profit at this point, and let's see what to look out for as we head into the New York session, London and the New York session today. So now with the situation we have here, what I did here during the later part of yesterday was to identify the structure at the $69.30 level. And why are we having the structure here? So it's important I just show you how I got to this level of having a structure at the $69.30 level. So if we go to as far back as the month of March, I think March 15 thereabout, we saw how price action at that level, the $69.30 level, had been a major determinant of price action in this market. Still, that sound is there, really. Good. Okay, how about now? How about now, please? Let me know. How about now? Okay, right now. All right. Thank you very much, Ikuka. All right. Thank you, Kikuka. Thank you very much. Okay, so like I was saying here, we had this all set up around this area. We had this level at the $69.30 level during the month of March stroke the last week of the month of March. We saw how this level was being a major determinant of price action. So at one point we had selling opportunities around that area. Then we also had buying opportunities around that area. At one point we had breakdowns, we had breakouts of structure, giving us a clue into how important that level is at that particular point in time. So I had to project this level into the future, into the present moment here, and that is why we have the $69.30 level. And if you look at the structure closely right now, let me zoom into what has been happening in this market in the last 12 hours or so. you will see our price action has been trading right around that level. So it just shows us how important the $69.30 level is as regards the price of oil at this particular point in time. And for the fact that a majority in this market are finding it difficult to make a decision around that area shows the level of importance of that area. So going into the New York session today, New York and London session today, we are going to be looking out for a structure within that level to now decide what our next line of action will be. Are we going to be seeing a trend continuation pattern within the $69.30 level, or are we going to be seeing selling pressure that will revolve into a reversal pattern around that area to incite a trend continuation to the downside? And for us to be able to identify this, we will need to scale down to a much more lower time frame, which will give us the ability to zoom into that current structure to see what is going on there. So for the sake of this video, we shall be going right down into the 50 minutes time frame. Now, before we go down into the 50 minutes time frame, I would like to say something here. So if we at any point on the lower time frame we see trend continuation patterns, probably price action continue to range within this area, then we see a breakout of the $69.30 level by pressure above the structure, then we might be in for an opportunity to buy going to the upside. And I want you to remember that we have a support line of that descending channel which we figured out at the beginning of the week. Remember, we had this whole structure figured out here, which is the support line of that descending channel. So I just gave you a glimpse into what that structure looks like there. So we are going to be looking forward to see how price action will react to that level. So if price action breaks out, reaches the $69.30 level, we are going to be looking out for moving our stop loss to secure the position while we wait out and see how price action will react to that level. So if price gets into that structure and we begin to see sell pressure, then it will turn out to be a technical expectation that price breaks down the structure, retest to incite a trend continuation to the downside. So you can see why I said as soon as price gets into the trend line, we will need to move our stop loss, secure the buy position if price action ever breaks out of the $69.30. And if price action continues to the upside, then we will look out for more opportunities. And the 71.50 level is another area we want to also monitor to see if price action will retest it to push price to the downside, or it will break out of that level to push price to the upside. So at this point in time, our center of focus is around this area. I don't want to let us get things complicated here. So our center of focus right now is around the $69.30 level, where we want to see what is really going on around that area on a much more lower time frame to decide what our next line of action will be. And if anything complicated comes in later on, be rest assured that I'm with you on both my TradingView and Telegram platform to give you updates as at when due. So like I said, now we are going to be going right down into the 15 minutes time frame. Hold on a second, I'm trying to okay. So going down into the 15 minutes time frame right now, so we are going to be focusing on what trading activities has been just right around that $69.30 level. So I will be zooming into this current structure so that we can see things more clearly at this point and look at what we have here on the 15 minutes time frame. It's looking more reversal at this particular point in time. The first thing you will see here is a potential head and shoulder pattern, inverse head and shoulder pattern. So if we take into consideration the impulsive move that brought us to this point, we can see that we have something that looks like not really a inverse head and shoulder, but it looks more like that, which further emphasize the level of the reversal structure that we have around this area. So we have the head here, then we have price come back into the 69, then we have the right shoulder around this area, and since then we have a consolidation phase going on around this area. So we have something that looks more like a reversal pattern at this point, where the $69.30 level is serving as the neckline of that reversal pattern. Now, how do we intend to take advantage of this opportunity at this particular point in time? So what we are going to be doing here is to continue to monitor price action around this range, and wait for a breakout of the neckline area at the $69.30 level to give us a signal that price action is going bullish. And if this happens, remember, we are not getting too excited at this point. Remember, we are on a very strong bearish momentum, as we need further confirmation to give us the leverage that buyers are gradually gaining some momentum in this market. So if price action breaks out of the $69.30 level, then we wait for a retest of structure to happen, whereby pressure resumes above this area or around that area, which will give us signs that sellers are finding it difficult to drop back below the $69.30 level to trigger an opportunity to buy. And remember what I told you regarding the trend line of this, that support line of that descending channel around the $70.50 level. We want to see how price action will be reacting to that area to decide if it's going to be retesting to push price to the downside, or it's going to be breaking that structure to welcome more opportunities to buy the US oil spot for today. So that is how we are going to be buying the US oil for today. So let's be on standby to catch that opportunity. Hold on a second, please. Please give me a moment, please. Sorry about this. Give me a moment, please. I want to sort out. I'm so sorry for that break in transmission. I had to sort out some personal issues here, but things are okay and fine now. So thank you for staying by. So here we are again. So what was I saying? I said we are going to be waiting for price action to break out of the $69.30 level to give us an opportunity to buy at this point. So remember what I said here. We are not having a buy stop order yet. We are going to be waiting for the breakout to happen, give us a significant breakout of that structure. Then we wait for a retest of the $69.30 level to give us that leverage to be part of a trend continuation to the upside. So let's keep this in mind. We wait out for a breakout, retest, then we join that rally to the upside. Now, that is how we are going to be looking out for buying opportunity in this market. Now, when you look at this whole structure, since considering the fact that price action has been bearish for a very long time since the beginning of this week, we cannot ignore the potentials of sellers too as well. So what happens if price action does not break out of that neckline at the $69.30 and instead it continues to nosedive to the downside? How are we going to miss out on that opportunity? Of course, no. So what we are going to be doing right now is to also anticipate the potentials of the sellers as well. Now, if you look at the structure here, what do we want to see on this chart that will make us change our bias from bullish to bearish for today? Now, if you look at this whole structure here, since price tested the $67.20 level here, the lowest point it has been at least in the last couple of months, we are going to be connecting the series of higher lows here. Obviously, we can see we have been seeing some higher lows. So when we bring out our line chart here, things becomes a little bit more clearer. So I will have a couple of trend lines here. So the first one I have is around this area. So we have this trend line here. Then I might project this one into this level to give me this one. So I will make this one a little bit thicker, as this will be serving as the major one, and this one will be the minor one here. So I bring back my candle chart, and here we go. So with this whole situation we have here, if price action does not break out of the $69.30 level to the upside to give us the buying opportunity we are looking out for, then we are going to be looking forward to price breaking down this trend line to the downside And if it does break down the trend line, then at this point we are going to be looking out for confirmations. Confirmations will come on a much more lower time frame. We could go to as far as the 5 minutes time frame to look out for it. We look out for price retesting the structure, multiple rejections giving us signs that buyers are finding it difficult to break above that level. Then at that point we look out for selling opportunities to join the decline to the downside. Then a further breakdown of the major trend line here will also welcome more selling opportunities in this market. So this is what we are going to be looking out for to sell the US oil for today. So we have two perspectives right now, and we have a couple of structures that will be guiding our trading activity. The first one is the $69.30 level, which is serving as the key level for today and serving as a neckline of a potential reversal pattern we just identified here. And then we have a couple of trend lines which are bullish at this point to guide our selling opportunities if price action ever breaks down the structure. So it's quite a simple setup we have here, so I hope that we'll be on standby to catch that move. And you can also screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. And besides all this, I'm always going to be with you on my TradingView and Telegram platform to give you updates on what to look out for when price action moves in a certain direction that needs an attention. So with that being said, here I'm done with the US oil. If you have any questions whatsoever, feel free to let me know right in the comment section, and I will be reading through to see if I can be of help. So that is that on the US oil. And in the absence of no questions, I will move on to the next pair. And the next pair we are going to be looking at today is the GBPUSD. So we go back into the 1 hour time frame, and here we are. So the GBPUSD has been bullish since the beginning of this week. Though we had some selling opportunities, remember at the beginning of the week we sold the GBPUSD, and what made us sell the GBPUSD, we are going to be talking about that in a moment. So we saw this whole situation here at the beginning of the week where price action was trapped within the range between the 1.257 and the 1.25420 to give us a consolidation phase, which obviously we know what we are looking out for whenever we have this kind of scenario. We want to see price action either break out of that structure or break down of that structure to give us an opportunity to trade. And in fact, it didn't take long on Monday before we saw that signal where price broke down the 1.25420 to give us an a bearish signal, which we actually joined. And during our live session on Monday, I can recall that I made mention that for those who had missed out on this opportunity, that it is important that we remain patient for another opportunity to mature before we want to be joining that move. And one of the scenarios we projected was that price action could come back, do a retest of that structure to incite the trend continuation to the downside, which was exactly what happened in this market. Price action moved in our direction with over 100 pips in our favor before we begin to see the buy pressure here resume on Wednesday. And during our live session yesterday, we projected this whole scenario here where we had a structure around the 1.250 level, which happens to be our neckline for the week. And we agreed here yesterday that a breakout of that 1.250 area will be welcoming a buy opportunity in this market. And as you can see here, during the early hours stroke the first couple of hours during the New York session, we saw the breakout, breakdown, retest of structure, and price action continue to the upside here. We also had an opportunity here yesterday, though the bullish momentum after the breakout of the 1.25420 wasn't that significant. And now going into the New York session today, things are looking a little bit choppy at this point. And one thing I would first of all like to say here is to acknowledge the fact that price action is right within our range where price action started the week. Remember, the week started around the 1.2570 area and the 1.25420. That was where the initial consolidation phase happened this week, and that was the highest point price action has ever been for the week. But right now, in the last 12-15 hours in this market, we have seen a situation where price action has found a new resistant line after breaking out of the 1.2570 area. Now, the question at this point is, price action breaking out of the resistant line at the 1.25700 area, which happens to be where price action started the week. Is this a sign that bullish momentum is coming in? That's the next question we want to be asking. Is this a sign that the bullish momentum is coming in at this point? But if you look closely into what is going on here, let me zoom into the structure. If we zoom into what is going on here, you will observe something very interesting. Though we had the breakout of the resistance line, which was our point for the week, though we had the breakout of the structure, now we can see that as soon as price got into this new high here, which is the highest point price action has been for this week, at the 1.25910 level, we begin to see sell pressure come in from that area, and this has lasted for quite a while now. And in fact, during the early hours of today, we saw how buyers have been trying to break out of that structure, and at every point in time it has been met with strong resistance from the sellers, pushing price further to the downside. And what this simply tells us is that there is a whole lot of presence of sellers around this area. So if you still have a buy position running, especially if you are taking it above the 1.25420, I will be advising you to move your stop loss accordingly to lock in some profit at this point, or move your stop loss to break even to secure this position, as we never can tell the sell pressure we have been witnessing around the 1.25910 could incite a sell-off in this market. So we want to be very, very mindful about this. Now that we have this all information figured out here, what is going to be our next line of action? How do we intend to either buy or sell for today? Well, the first thing I would like to say here is to acknowledge the fact that in the last 72 hours in this market, price action has been bullish. And to emphasize this level of strength of the buyers in this market, what I simply did this morning was to connect the series of higher lows here to give us this bullish trend line, which definitely is going to be serving as our yardstick for trading activity for today. And what this simply means is that as long as price action remains above the bullish trend line, we shall continue to look out for buying opportunity. And if we're already in a buy position, we look out for more opportunities to add more position to our existing trade, hereby maximizing the potential of this uptrend. Now, with the situation we have right here, let's talk about the perspective of the buyers at this particular point in time. Now, when we zoom into what has been happening here since the later part of the New York session yesterday, and for the fact that price action remains above the bullish trend line, I will be looking out for buying opportunity. But I wouldn't be looking out for buying opportunity anywhere below the 1.25910 area, with obvious reasons there, because of the selling pressure we have been seeing around that area since the beginning of today. So what I want to see here is price action take out all the sell positions around that area. So I want to see a breakout of the structure. Now, with a breakout of that level, at this point, we have confidence that buyers are finally taking out all the sell positions around that area. Then if we start seeing levels of liquidity increase in this market, which will reflect on the chart as a retest of structure, it could even come to as far as coming back into the 1.257. But as long as we have a breakout of that structure, it is a beautiful sign that buyers are likely going to break out that level. So what we are going to be looking out for to confirm is buy pressure at any point in time, like a retest. Then we continue to the upside. So personally, I'm going to be having a buy stop order above the 1.25910 level to be part of this bullish move to the upside, with a stop loss somewhere right below the 1.257 area, which will also line up with our trend line dovetailing to about 30 to 35 pips stop loss at that point. And then we see how far this move is going to go. So that is how we are going to be buying the GBPUSD for today. And in as much as we are looking out for buying opportunity, we also want to take into consideration the potentials of the sellers. And obviously, we have been seeing in this market here in the last in the last 12 hours, I guess, the continued selling pressure here. So we cannot ignore the potential of this pressure in this market, which might likely incite a sell-off anytime soon. And one thing about the sell-off here is this: when the GBPUSD drops, it simply means that the dollar is increasing. And considering the fact that from a fundamental aspect right now, not a technical perspective, considering the fact that we had an interest rate hike yesterday, it favors investing in the dollar, because you obviously, with a higher interest rate, you are going to definitely make more money if you invest in the dollar, which is something that majority in the market might want to consider to do, and might result in a sell-off in this market. But one thing that is making me doubt that potential is the fact that the Federal Reserve yesterday mentioned that this might likely be the last interest rate hike anytime soon. And because of this situation, it has sent a spiral of indecision in the market right now, where majority are considering to keep their money in the gold, probably, at least in the meantime. So from a technical standpoint at this point, we cannot ignore the potentials of sellers at this particular point in time. So if we are going to be selling here, remember we have this bullish trend line here. After connecting the series of higher lows, we definitely want to see price action breach that bullish trend line to give us a signal that we might likely be having a momentum shift. So if price action breaks down the trend line like this, then at this point we are going to be seeing this as a signal that the trend line may no longer have the capacity to resist the pressures of the sellers. And if this happens, remember, we are not getting too excited at this point. We need some confirmations to happen. So as soon as the breakdown of that structure happens, we scale down to our lower time frame. It could be the 5, 10 or 15 minutes time frame. We look out for a retest of structure to happen. Signs that buyers are finding it difficult to climb back above the bullish trend line, then at this point we can start considering selling the GBPUSD. So we could have a sell stop order below the 1.25420 at that point, so that we can join the trend continuation to the downside. And if a sell-off happens in this market, remember we have key structures that has a tendency of giving us multiple entries in this market. So we have structures like the 1.25 level, which happens to be our key level for the week. We also have structures like the 1.24840. We also have structures like the 1.245, which are critical levels that, if broken and retested to the downside, will welcome more selling opportunities in this market. So let's keep all this situation in mind. You might screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So let's be on standby for this one. We are looking out for buying opportunity right now above the 1.25910 level, and we are looking out for selling opportunities at the breakdown of that bullish trend line, which would definitely be a sign that we might be going in for a momentum shift. But rest assured, I will be with you on my TradingView Telegram platform to give you update as at when due. If you have any questions whatsoever, feel free to let me know right in the comment section. So I will be moving on to the next pair right now, which is the XAUUSD. All right, so in the absence of no questions, I will be moving into the XAUUSD right now. And yesterday we finally saw price action found a new high at the $2,080.50 level for the first time this year. And it appears we are going through a retracement phase at this particular point in time. So we are going to be looking at that in a detail and how we want to be positioning ourselves ahead of the London and the New York session today. So before I do that, let us go through what we saw since the beginning of the week. So I would rather bring out my TradingView platform so that we can look at the commentaries together to see how we were taking advantage and managing our existing trade as the week went by. So this is my TradingView platform, and our first commentary for the week was around here, where we identified a simple setup. And for the fact that price action was sitting on a strong demand zone around the 1,970 and the 1,975, I will be talking about that in a moment, especially for those who are not part of our live session at the beginning of the week. So we had this whole setup identified here, and I told us all on Monday that we are going to be looking forward to a bullish momentum considering this whole structure. And at this point in time, we had we were looking out for a breakout of the 1,990 at this point. Then we saw this move. We had about 150 pips move before price action took us out of that position, and obviously we moved our stop loss accordingly to lock in some profit while price moved in our favor, and we were taking out with some small profit at that point. And it was at this point we had a signal that we are going to be bullish for this week. And as soon as price came back to do a retest of structure, we saw this consolidation phase here happen, which lasted. We had a sell position triggered at one point at the breakdown of that structure, and we were taking out at a stop loss. We were taking out in a loss on that one, so the breakdown wasn't successful. Then we waited for the breakout, and it was at this point we had our second buy position for the week here, had the breakout of the 1,985. We also anticipated the breakout of the 1,990 to add more positions, and as you can see here, price action continued to move in our favor into our TP target at the $2,005 level. And as you can see here, we had our TP target hit. And before the TP target hit, I told us all to also have another position had the breakout of the 2005. So as soon as our TP target was hit, we also had a third position triggered, and that one also went to as far as I think about 120 pips in our favor before we started seeing this consolidation phase happen here yesterday. And after the live session, this was what we were able to come up with on the charts to guide our trading activity for yesterday. So we had the channel between the $2019.50 level and the $2012 area. Then we had a bullish trend line, which is supposed to guide any bullish momentum in this market. So we said as long as price action remains above the bullish trend line, we shall remain comfortable in our buy position. Then we look at what happened. We had a breakdown of structure at one point, triggered our sell position, but that move did not last long as we saw buy pressure resume again. And at this point, we anticipated the breakout of the resistance line had a $2,019.50 level. And this was what happened. We saw our price broke out of that structure. I think this was prior to the FOMC yesterday. We saw the breakout of that structure. And at this point, I told us all to secure the buy positions as Federal Reserve announcement is coming up in 25 minutes from now. We now have a new structure on the 50 minutes time frame, a retest of this new structure at a $2,025.50 level for buying opportunities. So we saw price action come back to retest the structure. We saw the bullish momentum began again, and we continued to ride the move during the FOMC. And it was at this point price action hit the TP target at the $2,035 area. In fact, at this point, I thought price would go further to the downside. And at this point, I also had a sell position at one point, but was taken out from that position at break even. Then at this point, I made mention here that sell position taken out at these junctions, no trade will be taken until normalcy comes back into this market. But I was so wrong. Price action went further to the upside again, and for those who took advantage of that opportunity, well, kudos to you for being on standby. Probably I was exhausted monitoring price action there, so I had to just leave the market and wait for normalcy to come, because anything could actually happen during this time, especially after and prior to major events like this. So if you have not positioned yourselves ahead of that event and price actions are finally started moving in a particular direction during the event, it's not reasonable to join a position at that point. So it's proper to be part of that move prior to the event happen. And if you are lucky enough to take a TP target at that point, I always advise that we stay out of that trade, which I actually did yesterday and told us all to stay out of that trade. So this morning, this is what I shared on my public platform. I said, since testing a new high, price action appears to be going through a retracement phase, and this juncture is caught within a range between the $2,045 and $2,030 level. Let's see how market will react to this zone for trading opportunities. So at this point in time, I was waiting for normalcy to come back into the market after that volatile trading activity yesterday, and thank goodness I think there are some normalcy coming into the market right now. And let's look at the live chart to see how we want to position ourselves ahead of the New York and London session today. So I was able to spot out a simple setup here that we can use. So first of all, let's look at the 1 hour time frame and let's see what we have here. So look at this whole structure here on the 1 hour time frame. And looking at how price action has evolved during the course of the week, it is quite obvious that price action has been very, very bullish in this market. As you can see, price action had continued to find higher highs and higher lows in this market, and right now price action appear to be retracing back into a key structure at the $2,030 level, which also shares a beautiful confluence with that bullish trend line that we identified here. So look at the bullish trend line here and look at the $2,030 area. So you would agree with me that we are at a critical point in this market right now where anything could actually happen. A seller position could come in, a buying opportunity could also come in. Now it now depends on how well we are prepared to be able to take advantage of this opportunity. So at this point in time, how do we intend to take advantage of this one? So let's look at the potentials of the buyers at first, which is more visible, more reasonable at this particular point in time, considering the long-term bullish momentum we have been witnessing in this market. So if we look at this whole situation here, let me zoom right into the current structure so that we can see things more clearly. So if you look at the whole situation we have here, you can see that we have a $2,030 mark area, which at one point in time had served as a buying niche after price action broke out of the structure during the later part of the New York session yesterday. And with the breakout of that level, you all know from a technical standpoint, when price action breaks out of a significant structure, we expect it to come back, do a retest of that structure, a couple of buy pressure happen around that area, then it could incite a trend continuation to the upside. So if that is going to be the case here, definitely we want to be seeing buy pressure right around or above the $2,030 area, which also shares a confluence with that bullish trend line. So if we continue to see buy pressure around this area, then definitely we want to be part of that bullish move to the upside. And to make things a little bit more easy for us to be able to catch that move here, I was able to connect the series of higher lows, which is the retracement phase since the retest of that new high here. So we had the trend line here. So obviously, if price action breaks out of that trend line, then it will be a sign to buy the XAUUSD for today. Then another thing that will also help us is this key structure here at the $2,045 area, which has been a strong resistant line since the early hours of today. So I want to see price action break out either of the structure. So if you are a conscious trader, you might want to wait for the breakout of the 2045. So having a buy stop order above the 2045 level seems more reasonable here to take advantage of a buying opportunity. Then with a stop loss somewhere right around the $2,030 mark, which is about 130 pips stop loss. So if you can afford that with your portfolio size, then it is something worth taking. But another thing that we also want to take into consideration here, and if you look at the huge stop loss we have there, why not try to take advantage of that opportunity early enough, even before the breakout of the $2,045 happens? So if we are going to be taking advantage of that one, then we want to see price action break out of the trend line, retest of that trend line, then we move with the bullish move to the upside. So to spot that one, we will need to scale down to a much more lower time frame, and let's look at the trend line here. Hold on a second. Oh, my trend line is not here, so I'll have to do some readjustment to that. So let's see. Hold on a second, please. Okay, I think we should be able to see it by now. Let's go back to the 15 minutes time frame. Now we've seen it. So here we are on the 15 minutes time frame, and that is the bearish trend line which we emphasized on the 1 hour time frame there. So like I said, a breakout of that trend line. Remember, we are not getting too excited. We wait for confirmations to happen, which is likely going to come in the form of a retest of structure. Then buy pressure resumes, then we can join. So you can see that we are able to join early enough before the breakout of the $2,045 level happens. So if this happens, we join early enough, then our stop loss will not be that would not be that significant. As you can see, we will have about like 70 pips stop loss around this area. So if we join early enough, then we have a buy stop order above the 2045, then we could actually add more positions as retest of structure to join the trend continuation to the upside. So that is how we are going to be buying for today. And to make things more easier for us, we should identify a structure here which is along the $2036.50 level, which a breakout of that area will give us further confirmation so that we can see things more clearly. Okay, let me give this. Then we have this one. Right, so here we go right now. So we have a key structure now that will guide our trading activity. So it's quite visible at this point. So a breakout retest of the $2036.50 level should be welcoming a buy position in this market. So at the breakout of that level, price will have broken out of that trend line, and at this point we have a mature reversal pattern to be part of a trend continuation to the upside. So let's keep this in mind, mark this out on your chart, and let's be on standby to catch that move if it happens. Now, in as much as we are confident that buyers are coming in this market, let's not ignore the potentials of the sellers too as well. And to anticipate a bearish momentum in this market, we want to obviously see price action break down this bullish trend line that has been supporting the bullish momentum since the beginning of this week. So for a sell-off in this market, a breakdown of the trend line and the $2030 area is going to be something that we are going to be looking out for to sell the XAUUSD. So a breakdown, you can have a sell stop order below that structure. Retest of structure will confirm a sell-off in this market. And what the reason why a sell-off could happen here could be as a result of profit-taking activities. And like I always mention here during our live session, that there is always a psychological reason behind this whole choppy situation after price action finds a new high, as majority will be fearful. The emotion of fear is quite dominant when price action finds a new high. Majority who had made a whole lot of money buying at a very cheap price will definitely want to be doing some quick profit taking activity, especially when we get close to the end of the week. So if this is going to be happening, then definitely we might likely see price action break down the trend line and the $2030 area to incite a trend continuation to the downside. So let's be on standby for this potential opportunity too, as well as we continue to monitor price action on the XAUUSD. If you have any questions, let me know in the comment section while I move on to the last pair for today. And the last pair we are going to be looking at for today is the USDJPY, which is another profitable trade for us this week. And before I go into the details, let's run through how this sell position we enjoyed so far this week had began for us. So I will go into the 4 hours time frame here to explain this in detail. So on the 4 hours time frame, we have a couple of structures here which was guiding our trading activities at the beginning of this week. The first one is in fact the bullish trend line that you can see on your screen right now. Then the second one is this key level had the 135.00 area, which was broken during the course of last week's trading session, as you can see here. Then we saw at the beginning of the week, though we had some buy position at the beginning of the week actually, and we had this trend line to help us guide if the bullish momentum will continue to the upside. So with this trend line here, we already had a sign that if price action breaks down the trend line, then this could probably be a retracement of the impulse leg that started last week. And you all know from a psychological standpoint, when you buy an instrument from at a cheaper price, when it climbs up, definitely you want to be doing some profit taking activity to make some profit off that commodity or instrument you have bought, which is exactly what has happened here in the last 72 hours. And we actually projected that move, and we saw the situation here. We joined the bearish move, and we had been selling since Tuesday in this market right into the structure. And remember, we identified this potential TP target zone for sellers and potential demand zone for buyers. Remember, what we did here is to use our Fibonacci retracement tool. When we run it through the previous impulse leg, we were able to aim at our golden zone area, which is always an area between the 50 and the 78.6% of the previous impulse leg. And right now we must have taken our profit actually at this point. This is our TP target zone, and I think price action has maximized the TP target zone right now. So I don't think anyone will be in a sell position right now. So at this point in time, we said something here on Monday that there is a chance that if price action drops into the structure, we could have a situation where price will respect the trend line one more time, which, as you can see right now, in the last 16 hours, price action has been finding buy pressure just right around that trend line. So what we want to see within this potential demand zone is a reversal pattern, like a double bottom structure, inverse head and shoulder pattern, a falling wedge rather. Then we are going to be in to join the second wave of the bullish momentum. However, if price action breaks down the trend line, then at this point we might likely be seeing a momentum shift where price action retests the structure, could incite a sell-off in this market. So these are things that we are going to be taking into consideration while we monitor price action on the USDJPY. Now, to have a better perspective into what is really going on here, we want to scale down into a much more lower time frame to see how we can position ourselves ahead of the London and the New York session today. Now, before I scale down into the lower time frame, I want us to acknowledge the 134.300 area, which has been an area where buy pressure has resumed in the last 16 hours here. So we have the 134.300 level, which we are going to be using to guide trading activities going forward for today. So if a breakdown of the 134.300 level happens today, we will have no other choice than to look out for more selling opportunities in this market. But if price action remains above that structure, it means that the bullish trend line we have here is still strong enough to incite another wave of bullish momentum. And if it's so, it goes on further to give us a reversal pattern, then this will be a very good confirmation that a bullish momentum is coming in. So let's scale back down into the 1 hour time frame to see how we can actually position ourselves ahead of the London and the New York session today. So can I delete this one right now as it is no longer needed? Okay, so or let me hide it so that I can use it as a reference point in the future. Okay, so right now we are looking at something like this right now. We are looking at a consolidation phase going on just right around the trend line and above the 134.300 area. So the question right now is, will this whole structure transition into a reversal pattern to push price to the upside, or will it transition into a trend continuation pattern like a bearish rectangular pattern where a breakdown of the 134.300 will incite a sell-off in this market? So this is what we are going to be looking at here, and in order to anticipate this, we'll scale down to a much more lower time frame like the 15 minutes time frame, where we begin to see things more clearly. So on the 15 minutes time frame, this is where we are going to be anticipating to catch that move early enough. So let me readjust this one. So we have this one right here. Is it 134.3? I think it is 134.220, I guess. 134.220. Okay, let me zoom this out a little bit so that we can see it clearly. Can you see my screen, please? Let me know if you can see my screen. All right. So we have the support line here at the 134.220, and then we have a resistant line somewhere around here. Let me use my line chart to get a specific point of connection, please. I think we are good here. So we have 134.600, very beautiful. 134.600 level. So here we go. All right. So we already have a channel around this area right now where price, so we can see that following the impulsive move here, we saw some rejection of the 134.600 by the sellers. Now we had the breakout of that structure, and since then we have been seeing that buyers have continued to negate any sellers attempt to push price further to the downside around this area. So at this point in time, I want to be looking out for more buying opportunities, as it seems as though price action is trying to find higher lows in this market. So I'm still going to do some readjustment here when we bring out our line chart. Okay, so we have a trend line here, so we want to continue to see buy pressure above this trend line. So look at this, we want to see breakout, retest, buy pressure, then we have our neckline with breakout. So right now we are going to be using this level as our next line of action to join a bullish move to the upside. So 134.770. So at this point, we are going to be having a buy opportunity above this level, and then we also have a buy opportunity above the 135.00 area. So we are going to be buying above the structures. So that is how we are going to be buying for today. So above the 134.770 and the 135.00 area, we look out for buying opportunities in this market. So let's be on standby to catch this move. Have a buy stop order above the structures, and let's see how far this is going to go. Now, in as much as we are looking out for buying opportunity, let's also consider the potentials of sellers too as well. And remember, on the 4 hours time frame, we acknowledge that this is the lowest point price action has been, and a breakdown of this structure definitely will be welcome in the sell positions in this market. So let's have a sell stop order below the structure, and let's be on standby to join that move to the downside. I'm already out of time right now, as I need to get prepared for my next live session, which is coming up in about 30-40 minutes from now. So these are my views here on the USDJPY. So let's be on standby, and obviously I'm going to be with you right in the comment section on both my TradingView platform and Telegram platform to give you update as at when due. So let's see how things goes out here, and I look forward to seeing you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone, and seeing you right in the comment section. Bye bye.